Good morning. Thank you. Yes, it is not only on the African continent, it is globally. I think, firstly, the developments in the digital economy is exciting. It has brought new life, a new type of economy, new opportunities around the world. But this new phenomenon of the digital economy and cross-border e-commerce has made the existing global tax rules quite outdated. Because what's happening is that mostly the big digital companies, the Googles, the Facebooks, the Amazons, and so on, can do business across borders without having a physical presence, as you've said. Now, creating a physical presence or a nexus or a permanent establishment in a country is the basis that gives a country the right to tax a business. So these companies do not have largely a physical presence, and so you can join Netflix without Netflix being in your country. And so these companies are then often are able to compete with local businesses and do business in the countries without having a physical presence, and no taxes are due. So Africa is not the only part of the world that loses. The whole world loses these taxes. And so currently at the OECD in Paris, there's global discussions having taken place over the past 2-3 years, trying to come up with new global rules to tax multinationals in the wake of the developments in the digital economy. And that is what most of the discussions are about. The rise of digital transactions in Africa is phenomenal. In Ghana, for example, user penetration has escalated to 21.1% of the population doing e-business. We expect that to rise to about 31% in 2-3 years' time. And so we're talking about hundreds of millions, and in other cases, billions of dollars of transactions going through South Africa, Ghana, Kenya, Nigeria. And these transactions are business activities that do not get taxed. And that is what we are trying to deal with.
So, Logan, in terms of the countries that are leading the pack when it comes to digital services tax, we know that the US has rejected this form of tax, but which countries are changing their tax laws to keep up with this trend?
Well, digital services tax is a kind of unilateral measure that countries have taken because the global discussions is going on and not reaching any form of immediate conclusion to try and develop the rules according to which multinationals will be taxed. Now, there are very, very sharp proposals on the table in this regard. And in 2 weeks' time in Paris, they will be continuing the discussion. In the meantime, 38 countries around the world have started to introduce some form of digital services tax. And in Africa, the leading countries doing that is Kenya, Nigeria, Uganda. Those are some of the leading countries on the continent. And this is a kind of tax on the service on the digital platform, and it would range between 1% and 3%. And this is a tax in addition to the income tax. And the US in particular have rejected the countries introducing digital services tax. I think it's useful to note that it is in fact the European Union that started proposing a digital services tax. The UK and France have been among the countries who've been introducing some form of taxation on digital services. And this has led to a standoff last year at the World Economic Forum between the US and France. In fact, in the case of Kenya, who's in the middle of trade negotiations with the US have made it clear that if Kenya proceeds with the digital services tax, it will not benefit from trade concessions with the US. So the US have been quite aggressive in threatening countries who will impose a digital services tax. Now, a digital services tax has a plus and a minus. On the plus side, it allows countries to get some form of tax from digital companies who are currently paying none. On the negative side, because a digital services tax is typically charged on the service itself, the companies, so for example, a Netflix or a Uber could easily pass on these tax charges to the consumer price, which they are doing, and they also said they will be doing in countries who are planning on a digital services tax. So in the bigger scheme of things, you could find that although countries are employing a digital services tax, these charges could just be passed on to the consumer. So this is only a temporary measure. The bigger solution is to find within the principles of taxation how you tax not only digital companies, but all multinational agencies with consumer-facing businesses, because countries where business are being made must have a share of the profits. Digital services tax do not tax the profits of the company.
Yep.
It taxes the service. And so the solution must be to find a way to tax the profits across the world.
So, Logan, I suppose the one big stumbling block is that countries themselves can't agree on a way forward. And in South Africa, for example, a local company like Takealot, let's say, they surely have to pay tax in our country. And then there's Amazon that also operates in South Africa. It has no obligation to pay tax. So local companies then are disenfranchised by this lack of digital services tax.
Yes, definitely. And that not by the digital services tax. Local companies are disadvantaged by the lack of taxation on the digital economy.
Yeah.
I think we must make a distinction between digital services tax on the one hand and the taxation of the digital economy. The taxation of the digital economy is broader than a digital services tax. The taxation of the digital economy talks about how do you tax the profits of a company who makes money in your tax jurisdiction. And so if Takealot has to pay a 28% corporate tax and it sells the same goods that Amazon does, but Amazon doesn't have an office here or a building here, Amazon can sell those same goods at far less because it doesn't have an additional 28% tax to consider in his overhead costs. And so that is the difficulty, because local businesses are severely disadvantaged. And it's not only for online businesses, it's also for physical businesses. If physical businesses have an effective tax rate that is far less than 28%, because multinationals structure their businesses through a complex set of tax treaties, locating part of their businesses in countries like Mauritius, Bermuda, the Netherlands, and they then have a multiplicity of tax deductions that effectively make them pay very little or no tax. It makes it very difficult for local retailers and manufacturers of, for example, South African businesses to compete with them. So we have to get this right.
Absolutely. Logan Ward, thanks very much for your time this morning on the AM Report. He is with the African Tax Administration Forum.